Hi friends, let's take a look at Tezos together. In today's episodes, I'm doing them all quite short. I'm trying to do a sort of 800 subscriber kind of joke. There's a running joke on the channel where I say I'll make an episode 5 minutes and it turns into 20, and I just can't control it. It's despite my best intentions. But today, because we've got 800 subscribers, and I just wanted to have a bit of fun with it and a smile about the whole thing, and it's Sunday, and all the detail we need is in yesterday's episode and all that. Anyway, I just thought I'd kind of leave off with I'd start off saying that promise again and see if we can do it, in all the episodes. And what have we got really on the go at the minute? Well, have we got this diminishing sort of momentum towards the downside as part of this here? It could be considered that way, but of course as well, we could be considered to be consolidating just at a sort of crucial zone here. So there's two ways to look at this right now. You could kind of look at it and say, if there's a sort of triangle effort on the go here, and this gives us the momentum to crack down the way, then maybe that would see us go down towards these lower targets, and that would be kind of negative. Also, on the other hand, you could be saying that this is us kind of running out of steam here at the 618, having had profit taking come in enough times in the golden pocket here, and maybe this is us kind of turning out to get a turnaround at this particular point here. There is this sort of question about the Class B bullish divergence you've got here on the go, as you see this upward slope here on the oscillators here, and of course the sort of this downward inverted type notion on the DMI there on that one. In terms of this operating potentially as being Class B bullish divergence in here at this area, and you could see a turnaround. Of course, 2,800 being that point where we've been hoping to see a turnaround at. Dropping down below here though does open up a couple of different possibilities, and we've covered them in the previous episodes, one of them being of course a drop even as far down as that serrated line of 2,620. Part of the dynamic here of course is involved in the Bitcoin pricing, and perhaps in terms of the Bitcoin pricing we could even see a sort of failure, a drop in this thing here soon. And there's a dynamic then that exists whereby, just trying to fill this in here, make it nice and green. This is why I don't make it under the time whenever I say it. This is why I'm doing stuff like that, silly me. Of course, if you're looking at the Bitcoin thing, and if Bitcoin as indicates the whole overall market having money withdrawn out of it, then of course you could see a diminishing price in all of the aspects of this. And we'll look at the dollar pairing in just a second. But a quick reminder, there's an extra dimension there when it comes to the Bitcoin pairing. And as we've seen recently, money is kind of left the overall industry, and that's seen a diminishing price here on the Bitcoin pairing, combined with a diminishing price in the dollar pairing, combined with a lowering of the Bitcoin price itself. So there's that sort of dynamic to be aware of. Now we've got the same thing on the go here essentially with the dollar price pairing, and the same possibility in a sense for divergence. But the divergence is just a warning sign in the same way that we still have the chance here of just kind of putting in a higher low and potentially turning around. So if we come up here and put in a higher high, then you could have said this is a high, this is a higher low, this is a higher high, etc. And that could come in at around about our resistance of 281. That's what we'll want to see happening. Breaking down below this area obviously opens up possibilities for a particularly bad move down towards the sort of 230 area, which would be another sort of 10 to 15% movement towards the downside. And you don't really want to see that happening, but of course that is the potential for us, and we'd like to see the 200 simple and this area of the 230 operate as support for us should that be the case. As you can see here, the VPVR does drop off just a wee bit just in this area if the prices were to crack down below, but this is because it works both ways. 260, as there's less supply and demand, there's less trading activity in here. So of course, while you can crack down past it quicker, you also have to acknowledge that of course maybe there will be no trading here at all, and that offers up another good opportunity for the potential area where you could see the prices turn around at. Now of course we can look towards the 12-hour, the 21 EMA in terms of our sort of top side resistance here coming in at that 280 level on the 24-hour time frame, and we can look down the time frames and see it's kind of coming in there at the same sort of point on the 12-hour, funnily enough. On the 4-hour time frame, 271. On the 3-hour time frame, as you look down the way, we can try and find an area where eventually, perhaps, maybe the EMA, we might at some point see us overtaking this 21 EMA, establishing price action above it, staying above it, and then being able to get a foothold there and move towards the top side. If you're looking down at the really low time frames, then you can look towards this sort of bullish divergence here in terms of this downward price action here, slightly, or whatever. But overall, we're just kind of consolidating in a period at a point of support, which is historically fairly significant for us so far. As you can see, looking towards the left here in terms of the hourly time time frame, just looking along, you know. So obviously this is an inflection point in the market, and we're kind of waiting to see how things will inflect, if you like, if you will. Overall, until such times as we make it above the 21 EMA, you can remain from a bullish point of view, having looked at the last while of price action being towards the downside. But then again, you know, at some point we are looking to try and see where our potential area for a turnaround could come in at, and this area is one that we can look to. If I put all the drawings back on again, get it off the drawing tool thing, and move over to the left and zoom it up and out, and then kind of just have a quick couple of reminders in here that, you know, we've done enough in terms of movements here on the Fibonacci type retracements to satisfy certain things. There seems to be the one there missing, so let's just do this as the last action on the episode. Draw it up to there and point this in and say, you know, you've got the 236 coming in right at around where the price action currently is, at that 264, 266 area. That's drawn in wick to wick. If we do it body to body, then you can see that we're 264, you know, right at that area. So this is why, as you can quite clearly see from that, even though there's drawings everywhere, this is why we're looking at this point here and just saying, look, you know, I'm not going to tell you which way it's going right now. You know, overall, the bullish type scenario could easily play out because this is an invalid Fibonacci retracement. We've got this higher low potentially coming in here as part of this movement, you know, or else potentially it cracks down below it and it goes on down the way. And that's what we're looking at, you know, in terms of this price action, where you could see a turnaround at 240, or you could have it cracking down below again. We've lived this story here. If you remember the price action here, back here on the 7th of May, you remember how all this panned out. It's the same story that we're living now. Can we get up to that 180 or 280 level and crack on beyond or not? That's kind of what it boils down to. Thanks so much for tuning in. Really do appreciate it. Share this video with a friend if you've got one that you think would like it. I'm absolutely delighted to have made it to 800 subscribers, so that's amazing. And of course, a friend of yours is a friend of all of ours, so introduce them to us and to the episodes here that you have. And you know, thanks you so much for tuning in. Really do appreciate it. And I'll catch you in the next episode. I failed in terms of the 5-minute thing. Maybe I'll do a 5-minute episode tomorrow, but you know, that's fairly good technical analysis, you know, and it should integrate fairly well with whatever you're looking at and give you a couple of clues as to how the price action might go. Hope you do well managing your risk out there. That's what trading's all about. Catch you in the next episode. I'll see you next time, which is tomorrow, by the way.